So Andrew, as we continue our series discussing the differences and the similarities, the pros and cons of different plan types, none are more similar than a 457B and a 403B, which are both offered to state and government employees. Now, Andrew, I know you confided in me last week that your head has been literally spinning trying to figure out all the rules and regulations. And for one, we don't want that to continue to happen because I think that's dangerous to your health. And we don't want that happening to you as well. Which is why we continue, Andrew, to make these educational videos so you can actually be educated versus being frustrated when it comes to all of these different plan types that you may have available to you when you're actually employed by a company. So today we are going to cover the differences and the similarities between a 457B and a 403B. So stay locked in. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to help to make the difficult and confusing process of retirement simple.
Absolutely, Andrea. And we do this simply by utilizing our team of strategic partners, ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a comprehensive and holistic retirement roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how you can maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So if you work for a private organization, chances are you're going to be offered a 401k, and we've spoken about this in our other videos. But if you do work for a not-for-profit or a tax-exempt organization, such as a school, university, a religious organization, a government job, or maybe a hospital, if you work for any of those type of organizations, chances are you are going to be offered a 457B or a 403B for your qualified plan. Now, some companies will even offer you both of these plans. So we thought that it was important that if you are going to be in that particular situation, that we would do an educational video that's going to cover the similarities and the differences between these two types of plans, because they are very, very similar in nature, but they do have some really unique differences as well that need to be pointed out. But before we get into that, there are two rules to retirement income that we always like to give you. And Andrew, what are those two rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So let's go ahead and talk about a 457B versus a 403B. So now let's go ahead and dive into a 403B versus a 457B plan. Now these plans, of course, are very similar, so we're going to point that out in this video. But let's first talk about who might qualify for a 403B or 457B plan. So if you're a firefighter, police officers, paramedics, nurses, physicians, public school educators, college professors, state or local municipal workers. If you're a trash collector, sanitation worker, if you work in highway maintenance, you may be offered a 403B or 457. State or any type of local government officers, librarians may be offered a 403B or a 457B plan as well. So for 2021, let's go ahead and point out how these plans are similar and how they're different. And they're very, very similar, by the way, very similar, but they do present some unique differences as well. As most qualified plans, both are funded with pre-tax dollars where you will pay taxes later. Both of these plans will do that. Both have a contribution limit, the exact same contribution limit of $19,500 or $26,000 if you're 50 and older. You have that catch-up clause with either of these plans, and we've covered these on other versus videos as well, so you're going to definitely always see some crossover. Both are going to require you to take required minimum distributions at your allotted time at age 72, unless that changes with the Secure Act 2 that they're talking about. But for now, at age 72, you will have to take required minimum distributions. Both will offer a company match, but we mentioned this before because these plans Unlike 401k plans, they are less common with a match because they do not want to fall under the ERISA laws that 401k plans fall under, because it'll make the plans a little bit more cost prohibitive. So we want to make that noted. But there are times and there are occasions where 403bs and 457bs may have a company match, but it's just a little less common. As we mentioned, both of these plans are offered by state, local government, and non-profit employers. Both will provide you a tax deduction as you're putting money in pre-tax. Both may allow you to have loans. Now you have to check with your plan administrator when it comes to loans, because not every qualified plan and not every company offering those plans will allow you to take loans from them. So it is on a plan-by-plan basis. Both of these plans can be rolled over into a single IRA, a traditional IRA, or a Roth IRA as well. Both of these plans can do that once you have left those companies. So you can literally combine a 401k, a 403b, and a 457b all into one single IRA if you were working and had an opportunity to participate in all those plans at some point. You can combine those plans over into one single IRA, or you can convert them into a Roth IRA as well. Both of these plans, just like a 401k, may also offer you a Roth option. So you can have a traditional 401k or traditional 457b, but the company may also in kind offer you an opportunity to contribute to a Roth 403b or Roth 457b. And both of these accounts do have annuities as their investment option primarily. If you have these accounts, your options for investing will usually be into an annuity of some sort. Now, we've talked about the similarities, but they're very similar, but they do have some differences. So let's cover that real quick here. A 457b plan, this is what's really unique about a 457b if you have one and you have another type of retirement plan. It works with any other type of plan where you can max out those contributions. So let me explain. So if you have a 457b and a 403b, and you have those type of plans, and you are an avid saver, so your contributions in that 457b, you can contribute $19,500, and then you can also max out your 403b plan of $19,500 for a total of $39,000 for that year. You cannot do that with a 401k and a 403b. You can only max out those plans up to the limit of $19,500. But you can with a 403b or 401k. With a 457b, you can max out both of those qualified plans. So it's a very unique feature that a 457b allows. A 457b, this is probably the most unique and probably the best feature about a 457b. If you leave that company before the age of 59 and a half, you do not have to pay a 10% penalty on those funds. It is the only qualified account that will allow you to do that. So if you do have a 457b, not that we would recommend it, because you will still be relatively young, and so it's never going to be recommended to take funds out of those accounts early, because that money should be working for you on the back end of your retirement, which can last literally 25 to 30 years and maybe even longer now. But if you did come into a bind, at least you don't have the restrictions that you would have from a 403b or a 401k, that if you took those funds out before 59 and a half, they will effectively put a 10% penalty towards those dollars. Not the case with a 457b. A 457b, like a 403b, does have a unique catch-up contribution clause that if you're 3 years out from your retirement age, it will allow you to put twice the amount into your retirement as a catch-up. So if you felt like you were behind and you were in a situation where you can really fund your retirement a lot more strongly, then if you had a 457b and you're 3 years out from your retirement, you can put in twice the amount of contributions into that plan. With a 403b, we've talked about this in our prior video. That 403b has its own unique contribution catch-up clause where you, if you work for the organization for 15 years, you may be able to contribute $3,000 per year additional to your other contributions for a $15,500 lifetime limit. With any of these type of catch-up contributions, understand there are certain rules and limitations that apply. So you're gonna always have to check with your plan administrator to see if any of these type of opportunities present itself for you. So what plan might you choose? Again, like all qualified plans, you don't have a choice. If your company offers these plans, this is going to be your only thing that you can choose. Now, your company may offer a 403B and a 457B, in which you then could decide how you would want to put forth those dollars. But usually, your company is going to offer one or the other, and so you really don't have a choice unless you're self-employed. Again, we always like to make this disclaimer that no matter what your situation may be, as you know, these videos are created for educational purposes. Please reach out to our office or your trusted financial advisor in your area or tax advisor so you can know what to do in any situation when it comes to your type of plans that you're actually operating in. So I really hope that the information that we shared with you today was insightful in helping you understand the differences and similarities, the pros and cons perhaps, of a 457B and a 403B. Please remember that these videos are created for educational purposes only, and you should always seek advice from your own personal financial advisor or tax advisor for your own particular situation. For more information on this topic or any of the other topics that we've covered in our past videos, feel free to reach out to our office or leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.